What is going on, investors? Hopefully you guys are doing well out there. It is finally Friday, and some Fridays just hit a little bit different. And I feel like this Friday is definitely hitting a lot different after we've had the past couple of weeks we've had in the stock market, particularly with the FAANG stocks, the Mag 7 stocks, however you want to call it. We've had massive declines. Did we see a rebound? Did we see follow through? When you see the Apple chart, it's going to be unbelievable. We've got a ton of news to get to. Google is shipping a ton of different products after Sergey Brin started cracking the whip. We've got GTC for Nvidia next week. We've got a lot of news to get to. Tesla making a boatload of news as well. Better kick things off like we always do with Meta Platform. Start of the week at 605. This one actually roughly flat. There was an area where you could start buying. We'll show that to you technically here in a moment. I know a lot of you are just waiting with bated breath for the Equity Empire paid subscription to launch. We are getting very close. The website is basically ready. We'll be adding some content here. That is coming very soon. Make sure you're in the subscription link down below. There is a newsletter link. Subscribe to that. That's over on Substack, but we'll combine the two lists and we'll get you all set up when that is ready to launch, probably in the next week or so. Meta is going to pursue voice-controlled AI agents. I tell you what, I remember doing these shows, probably the 5th year or so that we've been doing this show. So we've done hundreds of them at this point. I remember doing these sometimes and the news wasn't that great. Now we've got little stories like this, which are literally would have been the biggest story for some weeks. These are now, as we're in the age of AI and these companies are launching new products all the time, this is a little story, but it's a big one. Okay, Meta obviously has their Ray-Ban glasses, and they're using a lot to control the glasses with voice. When I was at the Consumer Electronics Show, that was a lot of the integration that I saw, as these things have, speakers and microphones along the side here, and you're controlling it maybe with like a single tap and then using your voice. And so voice control of AI is going to become a much, much bigger thing. And as we move into the age of robotics, where you're communicating with some kind of robotic agent, you're going to communicate not through typing on a computer, but you'll be communicating with your voice. And so these voice controlled AI and be able to recognize that, as we saw with Apple last week, how they had to basically shut down the latest version of Siri for another year or so. It's actually not as simple as it may seem, and these companies like Meta, probably Amazon to a certain degree as well, certainly at the forefront of all of that. Now, Meta was willing to shut down political dissent to enter the great country of China. This was several years ago. Now, if you look at this from the perspective of an American, or look at this outside of the view of an investor, you probably can have a number of different opinions on this. But the way I look at this, I appreciate this. As an investor in Meta, you've got to get into the country of China if you can, and playing by the rules there in China, which again, as us Americans, we can sit here and we can disagree and can't believe these types of things. But if you're an investor, you need to play by the rules in order to get into the market. Meta was not able to do that. I don't think it comes as any surprise, though. Meta was willing to do that. Now, company began testing its own self-developed AI training chip. In this press release, it says that it's working with Taiwan Semiconductor. That is not a mystery, okay? Taiwan Semiconductor basically makes all the high-end logic chips out there. And then I think as we get to the Nvidia segment, and I'm sure most of you saw the news with Intel this week, there's probably some combinations of TSM and Intel coming in the future as it relates to the foundry business, where TSM is going to have its hand in probably closer to 100% of all advanced chips. I think this could be a Broadcom thing as well, as the company is likely working with Meta on different types of things. I don't know if it's this type of chip, but what this is also showing you, as we move further down the road in terms of technology, there's going to be more and more use cases for custom chips, whether it's to process information a certain way, process it with maybe low power, process things depending on the application, and certainly more custom silicon rather than merchant or off-the-shelf silicon. I think it's going to become more and more popular. That certainly will benefit companies like Broadcom, not saying, certainly when we get to Nvidia, not saying you throw that one out yet either. This is a very ironic headline as well. Tad bitch of irony in here, as Meta is going to start testing the community notes algorithm that is actually used on Musk Twitter, otherwise known as X. That is actually a open source algorithm that was developed by Elon Musk in the wake of quote unquote fact checking or however you want to call it on X. If you're not familiar, somebody can make a post and not every post is fact checked, but if it starts to get a certain amount of reach, you will have a community note down below that might add some context, might actually correct the whole thing, maybe say this is an outright lie or this is deceptive or whatever. I've seen it even on advertisements. So somebody is paying to post an ad on X and then it's community note. Now, from a conversion perspective, that might actually help. And so maybe there's a strategy of posting something on X, having it get a community note, and then you can run an ad to it, because I've noticed some advertisers don't actually pull that down. In fact, they maybe put a bigger budget behind this. Be interesting to see Meta not only take the initial algorithm, but how they tweak it. I'm not really on Facebook. I'm on Instagram more, so I don't know how the two platforms, I can imagine with long form content and written stuff, maybe you see it more on Facebook. I don't know, but it'll be interesting to see how Meta evolves this algorithm over time. Moving on to Apple. Guys, did you know that Apple started the week at 231? This thing was down 8%, 80%. Wow. All the way down to 213. You want to see this technically here in a moment. There's always timestamps if you want to jump forward to that as well. Now, the company slipped this week is you had a flurry of different types of upgrades and information based on their iPhone shipments, those continuing to be lowered by city. I think as we look across the broader economy, inflation is certainly, a several-year-old story at this point. Consumers are more and more stretched. So if you have an iPhone that already works, going out and paying another $1,000 for one that is really not all that different, probably not something high on a lot of consumers' list out there. Maybe you out there is different, but for most consumers I'm looking at and I'm dealing with, most would rather go it, including myself, I'd rather go with the iPhone that I go. And I'm not particularly price sensitive, but as it relates to this, I am. Now, the new 16E, which is the new kind of quote lower end phone, that outpaced the initial iPhone SE initial sales, probably because I think it's a little bit better device at a good price point. And so it's a better phone than the initial iPhone SE, but it's probably not going to reverse China's sales decline, which is really one of the big issues with Apple. Inside of the country of China, the other thing that is happening there is they're giving subsidies. So the government is actually giving you a check or a refund check for certain types of devices, and they benefit Android devices far more than they do the Apple devices. As somewhat of a side tangent, I think this benefits a company like Qualcomm, which puts more of their chips inside of Android operating system. And as I was researching Qualcomm, they didn't include these China subsidies in their outlook for the next several quarters. In fact, really the whole year. And so they don't even have this based on their estimates. And so I actually think Qualcomm could surprise to the upside in a quarter or two as it relates to not only Apple's phones not really meeting the mark in China, but on top of that, the subsidies really benefiting the Android phones, which Qualcomm tends to have more of a presence in. Now, the Google-Apple search payment deal, this could absolutely be at risk. Based on the Department of Justice came out with a revised set of remedies, which actually really didn't change a whole lot. It does look like Google is going to go down the path later this year of maybe the DOJ recommending or coming to the final ruling that the company is going to have to sell their Chrome browser and then maybe not be able to post or be able to provide these types of payment deals to become the default search engine on something like Safari. Google will obviously appeal these rulings and probably be able to push them down for as long as they possibly want in terms of the court system. I think this impacts Apple more than it does Google because users are probably pretty familiar, and after 20 years of using Google, most users are pretty comfortable with that and have a lot of other products that they use with Google. And so this probably impacts Apple from a financial perspective more than it does Google. In fact, it might benefit Google if users continue to use Google and they don't have to pay Apple tens of billions of dollars to be the default search engine. Well, it's a win-win for Google. We'll see what happens here, but I think this also is starting to be priced into the stock. as well. The company is planning to revamp its operating system iOS 19. According to Mark Gurman over at Bloomberg, who tends to have the scoop on everything Apple, he says this is more than maybe a coat of paint, like touching up the apps and making you do little customizable things. I noticed with the last update with Apple's iOS, it was terrible. I lost track of things. Things didn't work. Things opened up a little slower. I think it's gotten a little bit better over the past month or so, but the company will have to be careful here. Its software is the main selling point. It's the main kind of glue that keeps you attached to the iPhone, since these days all smartphones basically do and perform very similar tasks. It's really the software inside of the phone that is keeping you attached and keeping you from switching over to Android. If they really screw up iOS 19, it's not like I would switch, but there are some users that are on the fence or not as attached or as married to iOS, so they'll have to be careful there. If they nail it, then that obviously would be good for Apple, but we've seen this company really hasn't nailed a piece of software in a while. There was a massive decline in global smartwatch shipments in 2024. A lot of it has to do with the fact that it's a mature product. There's not a lot of new features in there as well. And as you recall, last year, Apple had some pauses in terms of what they could ship out due to a patent lawsuit. And so just like traditional smartphones, I think Apple watches and smartwatches, they're at a crossroads in terms of capability. If you can start layering AI and other types of things, maybe it resurges sales, but most people that have a smartwatch, the new one that comes out isn't much better, and so they're staying on the sidelines in terms of buying a new one. Moving on to Amazon, start of the week at $196. This one chopping, but basically roughly flat or up about 1%. Finished the week at about $198 per share. This was a really weird and interesting story here. You had an FTC lawyer come to a Seattle judge and ask for a delay for the Amazon Prime trial. Basically, the Federal Trade Commission, the FTC, has sued or has taken exception with Amazon in terms of people signing up for Prime and being able to cancel and having transparency around the whole process of joining Prime and then getting charged for it and then eventually canceling. They're saying that Amazon makes it overly difficult and they are not really consumer friendly. They might weave you into a Prime subscription when you didn't really want one, and then it's very difficult to cancel. And I believe that's probably the case. I believe that the FTC probably has a case here with Amazon, and if they take this to distance, they probably win, or they force Amazon to do some things to change their business practices. What was interesting, though, is an FTC lawyer came to a judge in Seattle and was like, hey, we need a delay in this case because we don't have the resources. Obviously, you guys seen what's been going on with Department of Government Efficiency, or DOGE. They're laying off people at the FTC. So a lawyer initially came to a judge and says, hey, we're suffering from staff cuts. We need a delay on this because it's taken us a while to put this case together. We need to push this case back. What was interesting is very quickly the FTC came out, and this was an FTC person put in charge by President Trump. So this is not a Biden era FTC person. This is actually somebody that was more recently appointed by Trump. He was like, no. We have plenty of resources. We'll continue to put resources into going after big tech, and we will be moving forward with this case as scheduled. So this was a really weird miscommunication, really weird, unorganized FTC that you rarely get to see. The legal opinion that I sought out as this story started to unwind said that this junior lawyer would have went to the judge with the information that he had. He wouldn't have just gone to a judge and made this up. So the FTC clearly told this judge, or clearly told this lawyer, hey, you need to go to court and ask for an extension. We've got a bunch of staff delays over here. And then once the head of the FTC heard this, then he made a switch and said, no, we will deploy as much resources to this as possible. I think, long story short, what this is showing you is the FTC under Trump is probably actually not going to change much at all. If not, get even stricter for big tech, because I'll get to a later story here. They are going full force on these companies and they're not backing down. Now, retail sell-off swept up Amazon, Walmart, Costco, even Target. You've got the quadrant of retail here in the United States as economic tariffs continue to concern. You obviously have kind of the back and forth here with Mexico and Canada. There's a lot of confusion there. I'm confused. I don't even know what's going on, but the ones affecting China are in place. And so that will obviously impact all these retailers, particularly the ones that get a lot of goods from China, which is basically all of them. Anthropic, which is the AI company backed by Amazon, Google, and others, they reached $1.4 billion in annualized revenue. Obviously, that makes it a gigantic company. I think it's raising money. I think off the top of my head, maybe $50-60 billion valuation. Maybe it's a little higher than that. And so these AI companies are real. They're making real money. Now, I'm sure they spent way more than $1.4 billion last year generating this revenue, but it's just showing you the potential that they have. Moving on to Netflix. Start of the week at $8.66. There was a clear as day buying opportunity. If you, follow the charts, you should have bought Netflix this week and you're up about 6%. Other than that, not a lot of news out of Netflix. Moving on to Nvidia. Speaking of moving, started the week at 110, dipped down to 105. 105 on Nvidia. Well, look at the forward multiple on this one. We're in the 20s on this one, and we're still growing rapidly. Nvidia, though, perked up later in the week, finished up about 5%, finished the week at 121. GTC, which I actually don't know what that stands for, but that's the annual conference that Nvidia holds. Many believe this will be a turning point for tech stocks as the AI revolution will be on display in the great city of San Jose, California. I thought about going to this, but for one, it's like $2,500, and I literally have not made a dime in like 6 months. So $2,500 to spend on a conference where I would literally just be observing, and also you can get most of this content online. The really key stuff will be either one reported on, or you could watch the replay. So there's not a big reason for me to go to San Jose. I also would have had to either stay in San Jose or make the drive every day. Maybe next year I go. But I think this is a huge conference. You're going to get a lot on the robotics standpoint. Nvidia is basically going to be pumping that like, hey, this is what's next. They're going to be showing off a lot of their software. They're going to be talking about Blackwell. This is going to get people excited. They tend to make some type of events. You also have a keynote on the 18th, which will be Jensen Huang's showcase of what Nvidia has been working on, what's next. He'll probably go through interviews on the big networks and those types of things. You'll have a lot of people reporting from this event. CNBC, all the financial news networks will be publishing stuff on this, and it's hard for this event to really come across as anything other than really exciting and really interesting. And we'll see how the stock reacts, but this will be obviously a huge event next week, and I'll do my best to cover it with you here on the channel. Taiwan Semiconductor, though, pitched an Intel Foundry joint venture to Nvidia, AMD, Broadcom, and others. We obviously have a new CEO over at Intel where shares are all the way up at $24 per share. Talk about more of this on the Semiconductor Show this weekend. We'll go more in depth on what's going on over at Intel, but I think the likely scenario is the company maintains some type of foundry business, but they partner with the big boys over at Taiwan Semiconductor. I think that's probably good for Intel. It's probably good for TSM. It's probably good for the chip industry because TSM clearly is the Michael Jordan, the Tiger Woods, whatever analogy you want to put at. They are the best in the world at producing chips. And the more that they can do it, I actually think it's probably a good thing. Now, the company signed a $11.9 billion 5-year deal with OpenAI. That's not Nvidia. That is CoreWeave. But CoreWeave is more or less a venture-backed startup from Nvidia, among others. Nvidia feeds them GPUs. CoreWeave then borrows money from private equity based on the GPUs, and then they go and buy more GPUs from Nvidia. Some people refer to this as a Ponzi scheme. I won't go that far. CoreWeave also scheduled to go public really, I think, any week now. Obviously, they're putting that off for as long as they possibly can, get the markets to rebound. Once they do that, then CoreWeave will likely go public and probably buy a lot more GPUs. Moving on to Google, start of the week at 167. down, about 1%, finished the week at 165. I tell you what, guys, we talked about how last week Sergey Brin was like, hey, you need to be working as a Googler 60 hours a week at the headquarters, and you need to be coming to the office. And so I drove to San Francisco yesterday, and I didn't drive by Google's headquarters, but actually on one of the freeways, you drive right by a Google Cloud business, which is separate from their main headquarters, but it's close. It's within probably a mile or two of the location, but off the freeway, there's this big building, which is Google Cloud, and then Marvell and Micron are on the left-hand side. So it's this alley along a freeway where you have these big, gigantic companies. And I have driven by that Google Cloud business so many times, and there's a parking garage, there's a little parking lot out front, and there's cars there almost all the time. I've been there on the weekends. I've been there during the week. It's a little mix of, if there's a lot of cars there or a little, but I've never seen the whole thing full. I've never seen the parking garage, which is attached to it, full with cars. And I drove by yesterday, and that thing looked like there was like a rock concert there. There were so many cars outside. Everybody was in the office. Everybody was working. And you can see it with the press releases that we get with Google. Obviously, we talked about with Apple that search payment deal is at risk. I think some people are looking at this, the way I look at this might not be bad for Google. Like, they might not have to spend as much on traffic acquisition. If their search engine really is the best, us as consumers will go and find it and make it the default engine. Most of us are smart enough to do that. If our phones change to Yahoo and it sucks, we'll change it back. We'll take the 10 minutes, 5 minutes, watch a TikTok video or a YouTube video and figure out how to change it back. So I'm not really concerned about these search payment deals. In fact, I think they'll be beneficial to Google in the long run. Now, Snowflake is in discussions with Google for an AI deal. This is the holy grail, or this is kind of the thought process around these foundational models, which basically do everything well. And so Google Gemini, OpenAI's ChatGPT, Anthropic's Claude, or whatever they call it, your vision is you create this thing and then you can license access to it to other companies. And Snowflake and Databricks, which are essentially, might be too simplistic to look at it, but they're more or less database companies that take in data, allow companies to sort it and put it in different columns and rows. And then with Gemini or AI, you're going to be able to maybe search it or do more with that data. And so Google basically in talks with licensing Gemini. My guess is this is a Google Cloud Gemini tie-up. So Snowflake already has data that they push into the Google Cloud if that's where the client wants it. And then you're going to be able to layer on Gemini. My guess is maybe some on-premise stuff kind of gets developed off of this as well. Now, the company is potentially pursuing a purchase of a company called AdHawk, which specializes in producing eye tracking technology. So this is when you have these virtual reality or even these smart glasses on, and it can track your eye movement. Now, there's probably some the company's called AdHawk, but it didn't seem like they did a lot in the advertising space. But my guess is there is some advertising tie-ins here, because if I can track the eye movement of somebody, I can track if they're on a website, where they're looking. If they're in a store, I can track where their eyes looked, and then I can position advertisement or certain product in a certain area based on people's eye movement. And so Google just continued to move down that road. Now, the company launched a new AI model called Gemma, I don't know, but supposedly this can run on a single GPU. So this is as we move into the robotics phase of AI, or that starts to really take off from an investment standpoint. Obviously, these models are going to get compressed as much as possible so they can fit on the edge or on the device itself. This will come to cell phones. This will come to smart glasses. It'll obviously come to robotics. It's already in certain passenger vehicles as well. And so this is the natural progression, that these AI models get compressed as much. So when you see headlines like this, I think the uninformed think, oh my God, this is so bad for Nvidia. They're going to be able to run these AI models on a single GPU. this is where it's going. It doesn't mean that the frontier models and the big gigantic AI models, they won't need a ton of GPUs to not only be trained on, but run on, but there'll be a portion of these that run on the edge, run on the phone, run on robotics, run on smart glasses. So just keep that in mind as you see those cross. Alphabet continuing the press release as DeepMind unveiled 2 AI models to help robotics get physical. They showed this off online. This is the next wave in robotics. You need a software stack. Very similar. If you're going to launch a website, you're going to do it in HTML code or JavaScript. So there's this whole software architecture that makes the web work. So you have HTTP protocol, you have HTML, you have other things, JavaScripts, those types of things that make the web and the internet work. The same thing is required in robotics. You actually need a software stack that then people can go and develop. Right now, it's pieced together among a bunch of different companies. It was very similar in the launch in the early days of the internet. You had a lot of competing technologies, and then it kind of centered around one or two. And so once that happens with robotics, you should see a large amount of advancements, a lot of companies building on top of that stack, very similar to the internet. It got off kind of slow, and then it started to snowball. Same thing's going to happen in robotics. Google working on these things will accelerate it. And then finally, Gemini gets an update to allow search history. So if you probably give it permission, maybe not. If you're already signed into Google, it will tap into your search history, which for some of you may not be a good thing, and will provide personalized responses. So just keep that in mind. If you search for things and then your wife comes in under your account and starts searching for things, just keep in mind there's some personalized things in there that you may or may not want Google to track. Moving on to, I'm not saying anything about myself, just talking to you guys out there. Moving on to Microsoft, started the week at 385, ended the week about 1% higher, finished the week at 388. Xbox just layering on Copilot like Microsoft is doing. They're just layering on AI Copilot to everything. The FTC is going after Microsoft too. This has to do with the fact that it always is with Microsoft, the way they bundle their office productivity software with their cloud, and in this case also cybersecurity. So this could be bullish for cybersecurity companies like CrowdStrike, Palo Alto Networks. If you were to ask me which cybersecurity company I'm the most bullish about, it's probably Palo Alto. They seem to have kind of the highest end customer, and they have a really nice product mix. That's a lot of like free information that I gave you, but those are the types of things that I've been looking at. But the company basically bundles its Azure cloud computing business with enterprise software, with enterprise security, and it's difficult for customers to customize things. And obviously Microsoft will go to battle there, and my guess is the FTC probably has a real case against them. OpenAI launched some new tools for developers, and this is all around AI agents. The examples I've seen with AI agents, there's a lot of hype around AI agents, and I think they work pretty well, but there's probably more hype than substance there. I think as we move through the year, there'll probably be some better use cases here, but basically it's a web scraper 2.0. Web scrapers have been around for a long time. You could train a web scraper to pull data. You can even train web scrapers to go navigate to this site, click on this, go over here. With AI, it's making them a little bit better and a little cooler. They're allowed to do more things, and especially because you can give them access to do more things, they're also easier to set up. You don't need any special coding skills, and so this is something that is coming more and more in 2025. This was a big story that we've got brewing here in the United States. We're obviously TikToking our way down to a TikTok, either a full-on TikTok ban or a company here in the United States acquiring the United States business. According to President Trump, says they're dealing with about 4 different groups for a TikTok sale. Most analysts estimate that TikTok could be worth up to $50 billion. I've seen some people push back in my comments. Keep in mind, this is just for the U.S. business. So keep that in mind. And number 2, this analyst or this estimate of $50 billion, first of all, it could be way off. If you get enough money behind this thing, it could be worth a little bit more than that. But it could maybe potentially not even be for 100% of the whole company. I could see ByteDance not having to divest the whole 100% of the U.S. business. They retain a portion of it. I think they're trying to do that. And then you obviously have an American company, American servers, Oracle, those types of things playing into the fact that they have full control over the data and where that goes. Microsoft is obviously being rumored as one of the companies, and I would guess all of these companies would love to buy this company for $50 billion, particularly Meta and Google probably as well. Whether or not one of them, number one, will step up and do that, number two, would be allowed to step up. This is obviously a very unique situation that you have passed law. This is not Trump doing this. This is not anything other than this is passed and signed law under the Biden administration. This is the law of the land that this company has to sell its business to a United States company. Period. End of story. I think it went to the Supreme Court and basically got shot down. So this is going to happen. It's either going to get banned or it's going to have to sell part of its business or all of its business in the United States to a United States entity. Who ends up with it? I don't know. I just know Oracle is probably one of the big beneficiaries of that. Moving on to Tesla, start of the week at 247. This one bounced around. I mean, it was down here at like 220, bounced all the way back, up about 1%, finished the week at 250. Obviously, Tesla is going through some turbulence as it relates to their brand reputation. I would probably caution people out there to really draw long-term conclusions on these types of things. Obviously, in the short term, Elon Musk's political activities has some people uneasy. Some people are outright selling their cars. Some people will never buy a Tesla car based on that. Would they have ever bought one? Would they be the customer? Also, could this potentially open the door up for other customers, which maybe in the past weren't open to buying an EV? Now, because of Tesla, because of Elon Musk, maybe they would be. I don't know. Also, what I know about the car business. The car business sucks. I mean, it absolutely sucks. You look at Ford, you look at GM, you look at any of these car companies. The business and the market climate around automobiles absolutely sucks. So whether you agree with it or not, I don't care. The valuation of Tesla, not only today, but in the future, relies on other parts of the business. Number one, to a lesser degree, the energy and storage business. I would imagine that will easily be the fastest growing business in Tesla's company for next quarter. I don't think anybody has any argument. It might, I think, have a good shot at being the most profitable business unit. And so what is that showing you with Tesla is that they can develop other products and other services that can not only grow faster than the automobile revenues, but also become more profitable than the actual cars. And then if you get to self-driving, I was in San Francisco yesterday. My kids and I had fun counting all the Waymos that we saw. And spoiler alert, there was a boatload of them. And so we are talking about a massive market opportunity. I know people get in my comments, you don't even know about Waymo. You think that's 5 years off. Just drive around San Francisco and you will see self-driving cars with nobody in them is already here. This is not a 2026 story. This is not a 2030 story. This is already here. Tesla will play in that market. When is anybody's guess, but they'll be in that market and they'll be one of the players in there. So that's a future market. And obviously you get to the Optimus robot, which again, some of you guys have no clue about or have no perception about. But if you did 30 minutes of internet research and started connecting the dots, then you would realize that's probably going to be a very big market as well. Speaking of big, Elon's $56 billion pay package, they're trying to restore that. Obviously, if you're Elon Musk, you definitely want that to be restored. Delivery expectations are being slashed across Wall Street. And so here's where Tesla can surprise to the upside. This is the game that Wall Street plays, a little bit of a game that's going on with Tesla. The delivery expectations are going to be put on the floor based on what's going on in China in terms of competition, based on the refresh Model Y, taking maybe a couple of weeks or maybe even a month or more of potential sales off. And then you've got Elon Musk doing his political thing. That's keeping people on the sidelines of buying these cars. On top of that, the economy sucks, interest rates are high, and these are relatively expensive cars. And so you are having expectations slashed. And so when expectations are slashed, if Tesla comes underneath the slashed expectations, well, it's probably not good for the stock. But if the company can actually meet or come just a little bit above the expectations and the bar that was lowered, that's a recipe for a bounce back. Now, President Trump was in full-blown pump mode for Tesla. You not only have Elon Musk pumping Tesla, but I'll get to another story here in a minute. I'm sure you guys saw it. Tesla was on the White House lawn this week, or the White House driveway, and he's saying that attacks at Tesla are an act of domestic terrorism. I believe the Attorney General name is Pam Bondi, and she's seeking a 20-year prison sentence for somebody that did some vandalism on a Tesla service center. And the word of that is going to get around very quickly. Now, I'm not sitting here arguing about the fairness of that prison sentence or any of that. I am just saying, if a 20-year prison sentence is hanging over political protest or protest against Tesla, they will dry up very, very quickly. Musk pledging to double Tesla's U.S. production. My guess is this was already in the cards. This was something they were already going to do. We've seen this numerous times with President Trump. People like Apple a couple weeks ago were like, we're going to spend $500 billion, which to Apple is like nothing. We're going to spend that in the United States. Apple was going to do that anyways. And so they make this announcement and it catches the press. Tesla, not immune to that. Donald Trump bought a Model S, although he admitted that he has not driven a car in a while. I guess the car can kind of drive itself, but I believe he bought a Model S. And I think for his granddaughter, I think he bought her a Cybertruck. And so, conservatives and then like Hannity and other conservatives say, I'm buying a Tesla now. Well, people are finally waking up that these cars are way better than a gas car. And I'm saying from somebody that has bought many expensive gas cars, including Mercedes-Benz that are close to six figures, I have driven the nicest of nice gas cars. Tesla by far is the best driving experience, and just having to go to San Francisco yesterday, being able to put it on autopilot, sit back and relax and let the car drive itself. It drove very confidently around the streets of San Francisco. In fact, the way it drove in San Francisco was better than even in the small town that I live here in California. Full self-driving is making progress. Would I sit in the back seat and let it drive? In certain situations, I probably wouldn't put my kids back there or my wife and just let it go. Probably not there yet. It makes enough mistakes, including trying to turn left on a red light just earlier this week with my kids in the car. So you got to pay attention to this thing. It's getting a little bit better though. Company is mulling a low-cost Model Y to regain market share in China, as the China competition is just unbelievable. I mean, you should see some of these China EVs. It's unbelievable. And I think Apple is seeing this with the phones. I mean, China just obviously from a manufacturing perspective can see what somebody else does and then almost instantly copy it. We'll probably see it with GPUs here in the next, 6 months. You probably have ones that rival what's going on over at Nvidia. So they can just do that in China. It's just a natural thing that they can do. Some people refer to it as theft or IP theft. Other people just natural competition. And, Tesla in the China market, they're going to have to go to war there. Tesla warned a U.S. trade rep, tad bitch of irony in this headline, the harmful impacts of tariffs. And so, yeah, you think that's probably a thing. And the Wall Street Journal going with a little bit of headline clickbait here saying Elon Musk secretly visited U.S. spy agency. But this is I understand. If you don't like Elon Musk, if you're, a super blue-haired liberal, this scares the heck out of you. But it looks like he was there to talk about workforce reductions, which again, little odd given the fact that Elon Musk was not elected, but it is what it is. Tesla is looking to Baidu for help for its advanced driving assistance systems in China. We'll see if Tesla is having to partner with somebody on the full self-driving or these types of things inside of China. It certainly seems like that helps. Okay. So if you are doing business in China, to get help from some other domestic company inside of China probably does help from a certain perspective, whether you need the help or not. That is something that probably does that. Now, moving over to a very important technical segment of the show, the S&P 500 made a big, gigantic pullback. And many of you are panicking and wondering what you should do. Well, just pull up a chart and look. Is this really scary? Yeah, over the past, this was like one of the fastest drawdowns. I think I heard this on CNBC. This was one of the fastest drawdowns in market history. So markets are moving way faster. And some of it has to do with 24-hour trading. Some of it has to do with just information flowing. Just a lot of different factors are playing into the fact that markets are moving faster than ever before. That's why it's really important, number one, that you either prepare yourself and devote a little bit of time every week. I know everybody's busy with family and all that type of stuff. Devote some time yourself every week to kind of check in on things, formulate your plan. If you can't do it, I'm here to help you. That's part of the reason why what we're doing here. This was a big, fast pull down, but it's not scary. From a technical perspective, you're back to the middle of the channel. These are areas where you can step in and buy. If you're an index fund guy, this is when you can devote a little bit more. I sent out a newsletter, I think it was last week or the week before. Look, if you have automatic deposits in a 401k where they're pulling money out of your paycheck, you can tell them, hey, pull out 7%, 8%, 9%, whatever it is. Bump it up for the next couple of quarters. On these pullbacks, this is when you try to put more money in, dial it back as the markets go back to all-time highs if you want. If you can make the lifestyle adjustments, instead of saving 8%, save 9, 10, 11% and try to keep that on. Obviously, for your financial future, it's going to be good. Now, I'm a new proud shareholder of Meta. I actually had to sell most of these stocks. This was maybe like 2 years ago. I took that job at MarketWise. It forced me to sell all of these stocks. So I was basically out of all of these stocks. Been waiting for a time to get back in. Meta got in this week as you made your way underneath the middle of the channel for the first time in a while. Made a position there. I want to see Apple. Whoa, look at that. Down 8%. I mean, big move down with Apple. You are close to a middle of the channel. We'll take off that purple line that should serve as some support. Here you are with Apple underneath the middle of the channel. I didn't start a new position in Apple, but that is one certainly might happen next week. Excuse the extra lines here on Amazon. We'll delete some of them, but I've got a new green box. Those of you that have been fans of the channel know that the green boxes is a buying opportunity with Amazon. We're right on top of that. This is a buying opportunity anywhere where shares are and certainly lower. Netflix, new proud owner of Netflix. This one got, again, underneath the middle of the channel. I'm a simple guy. And I would urge all of you to formulate a relatively simple plan that you can execute on. Every morning, I wake up, I look at the stock market, I look at all the charts, I do it all. I have time to do that. This is more or less my job. A lot of you guys out there don't actually have time to do all that, and you're trying to factor in all this stuff. Should I buy now? Should I sell now? Should I do this? Should I do this? You need to simplify it as much as possible because, again, I have all day to figure this stuff out, and I have the simplest plan that I've seen on the internet. When the stock gets, and it's in this massive uptrend, it gets to the middle of the channel, I buy. I did it with Netflix. I don't have any reason to really buy Netflix other than it hit a buying opportunity. Nvidia found support. Very key level of support here at 103 and dramatically bounced up. With Nvidia, what we need is we need to move higher than the previous highs at 150. Because right now, if you want to zoom in, you made a high back here in November, slightly higher high back in January, but since then, a lower series of highs. So for Nvidia, you need a rally from 121 up above 155. That would conclude that this uptrend is still intact. I think it is. I think this stock is undervalued, and it's certainly one I've added to a lot over the past couple of weeks. Google is pulled into a buying range as well. You could adjust this middle of the channel line. It's in a weird formation, but you made a high, higher high, higher high. As this one pulls back, you are absolutely buying that one as well. Microsoft, we've got a green box on Microsoft, and here we are firmly in this. This purple line is also a decade-long, multi-decade-long uptrend. You are a convergent of two trend lines. It is absolutely time to buy Microsoft. And then finally, Tesla tends to swing. It's hard to put trend lines on Tesla other than sideways and flat, because that's basically what the stock has done for like 4 or 5 years now. It's basically gone sideways and chopped between, it's a wide range, $110 up to $480, but you've basically chopped in between there. If you slap on a fixed range volume profile on this one, which gives you an indication of, particularly, this works really well in sideways chop. Doesn't work as well when you've kind of had a takeoff, but with Tesla, this volume profile tells you where everybody has bought shares of Tesla. Nobody bought this stock up at 480. In fact, if you bought it up at these levels, you need to adjust your plan. Everybody has bought this stock basically where the shares are now, 250 and lower. And so you are sitting on an area of support. Shares should find some footing here. You could argue that you made some lows down here at 102. You made a new higher series of lows here at 142, and then maybe that holds. I've got a longer term red line here, which I'll change to purple. I also think that's probably the longer term trend. It probably can be adjusted a little bit, but that's probably a trend that you're moving on. So you're converging against sideways consolidation and a longer term trend with Tesla. Obviously, you have to believe in with the other products, because the car business, as people correctly identified with Tesla, is a terrible business. The stock has no reason to trade at the multiple it does, but when you factor in some of the other businesses, then it could potentially trade at that valuation. Folks, that was the FAANG Stock Recap Show for Friday, March 14th. Thank you for hanging in this long. Thank you for being patient with our launch of our new website. It should come here very soon, within the next probably week or two. Very excited to bring this to you, and I'll let you know when it is live. Subscribe to the newsletter down below. I send out newsletters twice a week, once on Monday, once I've said on Friday, but it's really Saturday. I send you kind of a recap, get you primed for things to come. Hopefully you guys enjoyed today's video. Have a great weekend and a safe one. Good luck with your investments.